All right, ladies and gentlemen, I hope you had a wonderful day. Since we went over the recap for the week yesterday and most of the data comes out later in the week, I thought I would focus on the main event of earnings and show you all how I swing trade small amounts of money coming into the earnings season. It's been about 5 or 6 weeks in a row of us hitting 1,000% gainers. We made that first video, how we turned $600 into $7,000. And this video will be very important, but most of these trades that I have been making, they have been below $100 on the options. And I really think because of the environment we're in now, it is creating a lot of opportunities. Options will always be difficult. It was a doozy last year and the year before that, but now since the market has moved 30% in a very short amount of time, there's a lot of names, even the ones we hit a couple of weeks ago, these names have moved a tremendous amount. It's leaving open a wide range and there's a lot of opportunity for surprisers. It is creating this opportunity to trade small, emphasis on trading small and getting big returns. So what I want to share with you guys today is all of the earnings plays that I made. I made 6 trades today that grand totaled less than $300, and now tomorrow morning we are going to have 6 earnings plays that we will be able to monitor, and I want to show you the process of how I went about it and what I plan to do over the next coming days. The best part, I did all of this live on stream, baby. YouTube.com/TheStockMarket. We are there every morning, 6 a.m. Pacific time. I wake up early till the market close, but we did this all day today, and I plan on doing this every week until the earnings run out. So here's the disclaimer. Option trading is extremely risky. You can't lose all the financial investment. Please don't financial advice. Accusation no purpose only. Have a wonderful day. But no, in all seriousness, I want to show you what I did today. I'm not going to go over the entire strategy because that video I told you, how we turned 600 into 7,000, this is the tutorial on the exact strategy. It's not like I'm charging you money for it or anything. I just want to make sure everybody knows because there's a lot of little things and I go over it in that video. And if you were watching there, we're going over all of the estimates live. I'm doing this in my head and I want you to understand everything just in case I start moving a little bit too quick. So that's where it is, and that's the first big thing I got to tell you. The second big thing is that all of the plays that I'm making, the ones I'm going to make in the future, the ones that we already made today, none of them are a lock. There is no guarantees. Believe it or not, all of these plays are expected to lose. That's why I'm trading small amounts. The only way that we make money on these plays is if something unexpected or abnormal happens. What I am doing is going to the option chain. This should be familiar for some of y'all. And I'm seeing what is priced in. And then I am determining if something outside of being priced in is an appropriate or a cheap price. That is the main element of what I am doing. So there's no real guarantee. If you're like, Josh, I need a play right now. I got 20 bucks. I got 50. I want to throw it. I need a guarantee. Unfortunately, all of these are requiring risks. That's why I am spreading my seeds on all of them and getting exposure while making sure I don't expose myself with a high dollar amount. That is the real big element. And finally, the third big thing is that none of these are day trades. So a lot of people were saying, how do I day trade with options? I don't have the 25K. Can I make these plays? And I just said, well, yeah, you could use a cash account if you want to avoid the pattern day trading on options. But here's the deal. Every one of these plays, the last 6, whether it was ARK making $300 into $5,000, whether it was Nike $100 into $1,000, the FedEx, you could go down the list, even the TSM, none of these plays were day trades. If anything, we're buying them 1 day before, 2 days before, and then you're sitting a little bit, wait for the event, and riding it through. This is one of the advantages of trading small, is that you don't really have to be all crazy monitoring them. Even if they fail, which they are expected to, they shouldn't cost you a lot, and you should be able to get a lot of exposure. And then finally, we have a bunch of earnings on the way. So Chad, I hope you're ready for this. We will go over what we did today live on on stream. We'll go over the plays. I'll even give you some reasoning because I didn't take every single play, and you'll see what we're working with. And like I'm telling you, if you are interested in any of this or you are going to be playing any of these, I better see you on stream. So with that being said, I need a thumbs up on the video. Make sure you guys are subscribed. We're posting these videos every night, and I already told you about this stream, baby, so we'll see you there in the morning. Run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, before going into everything you're going to need to do this, you need to watch that tutorial. And if you are on stream, I'm going to do all of this live, but I want you to see how the last couple of weeks played out. You may have remembered this one. We made a play on Citi, Delta Airlines, UNH, and Bank of America. What ended up happening? I spent $100 on Citi. I ended up selling out for only $12, took some extra money back. That one was a loss. UNH, we spent $67. We played it one way. That one was a loss. Bank of America, we spent $25, and believe it or not, I was up 100%. I decided not to take it, and I probably should have, but that was a $25 loss. And then Delta, this was the 1,000%er. I sold it right below 1,000%, and believe it or not, this thing actually ended up going, I think like 1,700%. It actually absolutely went crazy. I just sold out earlier on that day, but this one was the winner. So this week, we actually made $227, spent $222, and my net profit was $5. If I optimized the sell, we would have had another like $200 or $150. If I took the Bank of America, we would have got our 25 plus 50 profit, would have been another $75 there. You could have done pretty nice on this. Again, hopefully you're noticing a lot of plays, a small amount of money. The idea should be to, at the very least, break even, and then if you are able to optimize the sells there, you will make a decent amount of money, but also, too, if you let a couple of ride and they don't play out, you will get clapped on them. The next week, we made a couple of more plays. I did the Discover puts, or I think we went both ways, spent about $90. I still have these open. They're worth about like $30 or $40 now. They went up to $1.45, and it's been bouncing all over the place. We have till the end of the week, and I was like, hey, I already realized profits on TSM, so I wanted to push it because, again, you get a couple of these, that could be good, but one thing I've been telling everybody live, I'm showing you how to find these, and the idea is get that exposure, not risking too much, but whether you want to go for break even, a small profit, or go for the big one, that is up to you, and let your other plays and portfolio make that decision for you. But like I'm saying, we already had a nice 1,000%er. I said, let's let this one ride even though it was going up, and we had TSM the last week, $60 sold out for $685. Now, in that case, we spent $150 that week, currently standing at a $530 net profit, $560 if I just sell out there for whatever the Discover's worth and take my money back. Not too bad, but maybe the Discover comes back up. But as you're seeing here, it even makes up for the losses last week. And remember, coming off of the other 1,000%ers, we are still well into the green riding that out, and that is always awesome. Now, as far as the plays that I made this week, I'm going to tell you the plays that I did, and we'll be able to go over all of them. Why isn't it showing you? Here, you'll be able to see all of them, and I'll explain to you the process and what we did live on stream. So today, we made a play on Verizon. They report tomorrow morning. This one is playing both ways for $20. Yes, I got a call and a put for $20. 3M, they report tomorrow morning. I did one direction on that instead of going both ways. Spent $32. GE, we played both ways, spent $108. This was the most expensive play of the day. RTX, we played both ways for $51. Procter & Gamble, one way for $35, and Logitech one way for $35. So hopefully you're seeing these are plays. Some of them I'm getting exposure to play both a call and a put. The other ones I am only going in one direction, and this is what we were talking about live on stream. It's up to you. If you have a conviction in any of these plays, you could go both ways, one ways, and you could increase your amounts. The reason why I'm doing this, they're all expected to lose. I don't know what is going to happen, and I want to keep my budget lower. I'm going after the ones, if I see an option action is more expensive or cheap by using the strategy, the ghetto standard deviations. I'm making a determination if it makes sense to go about it, and we are also looking at how they have moved as of recently. So I'll go over all the plays here. We'll go specifically so you could see them, but the grand total for every one of these plays for tomorrow morning is $281. Not too shabby. We need to make $281 just to break even. Anything after that will be a pure profit. So we'll see how it ends up going out. Hopefully we see you there, but now I do want you to notice a couple of things. This one should be the most obvious. All of these plays have earnings tomorrow morning, and this is how we are going to be going about it live on stream every day. The day before, I am going to go over the earnings, or at least if it's after hours, I will do it the day of. So these all report tomorrow. We made all of the plays here today. Tomorrow on stream, I'm going to go over Netflix, ISRG, Texas Instruments, Baker Hughes, Stride, and anything else reporting, and then the companies for tomorrow morning. We are going to be looking at all of those tomorrow. Then the next day, we're going to look at the ones for after hours, and then the ones in the morning, and so on and so forth. And like I'm saying, today it's only, or this week, it's about 70 companies. Next week's going to be like 150, and then the week after that is going to be 180. Now, how do you know which ones to pick? This is the difficulty, and this is where you don't have to always listen to me. I'm going after the plays that I know about. I know some of their history and how they can move, but we are going through every single earnings preview and determining if it makes sense in looking at stuff. So this is what I go over live on stream. We look at the guidance. If you go watch that pricing in video I made the other day, like I was telling you, you want to know if people have a high or low expectation. We are going over what is expected, getting an idea of the numbers, but mainly the number one thing I'm looking for, and this is what's been paying out recently, is if the stock has really moved in the last couple of months here, because that could lead or tend to an outsized reaction given how much it's moved, especially if it has a report confirming a great reaction or going opposite to what just happened. So in this case, Verizon, they're up 24% on the quarter. S&P is up only 13%. Communications are up 10%. They are an outperformer. It was pricing in around 3 to 4%, and you could take a look here. This is why I kept it small. On the Verizon play, I only played $20 to go a call and a put, and that's because besides the last earnings, this thing barely would move. Last time they surprised, they were able to move 9%. So if you're not familiar with what I'm doing here, what I did all day today, I went one by one. So you see 3M is next, and then we went to GE, then we went to RTX. I pulled up every single one of these live, and we went down the list. And after going through all of these, I would determine which ones I wanted, and I would show some of you what would be 2 standard deviations in the pricing. Even if I didn't want to play it, you had that ability to make your own decision on it. So let's go to the Verizon one, and I'll show you now. They moved up a lot. They're leading communications. They did very good, but why did I play it small, and what did I play? Let's go to the options here, or the purchases. So we did this at, 2 p.m. Eastern today. I grabbed one of the 36.50 puts for 9 cents, and then I grabbed a call for 42.50 for 11 cents. And you'll notice I grabbed one extra week of time. That is a big part of the strategy here. We are not just trying to grab the weekly, because if something does happen big, we want to make sure we are getting a little bit more time. So as far as the plays, and you could even get a little bit more of an idea of why we went with what we went here. Like I said, Verizon, it's moved a lot. It moved 9% on the last earnings. It may be able to go a little bit more crazy if they're able to continue. And like I'm saying here, with some of these plays, they've moved up 20-30% in a short amount of time since their last earnings. There's a lot of meat on the bone. If they have another good earnings and surprise, they get their recovery, it can move up a lot. That's why I wanted a call. But at the same time too, if they did bad after what they just did, they may be able to drop in. I wanted some exposure, but to pay too much money on a stock that doesn't really move all the time, I wanted to protect myself, and I didn't go big. So the put, I grabbed the next week 36.5 put, only one of these at 9 cents. And the thing I liked about it, just a couple of days ago after the little rally there, these puts were going for a lot more money. They were going for almost double. So I said, hey, that's a little bit cheaper. You go to the calls. I don't know if it's loading up. They were a little bit more expensive, so it kind of balanced out a little bit, but people were feeling optimistic. But that was the first play that we did, and then the second play of the day that we're waiting for on tomorrow is 3M. Now, this one, I grabbed a February 2nd $99 put at 32 cents. We'll load it up over here, but what you should notice about this one, and it ended up going a little bit higher there, but this one also was just going for 60 cents not too long ago, so it was at a discount, but I only went one way on 3M. The reason why, they are at a very interesting level in terms of recovery. They've kind of been pinned here, but if you looked at the calls, they were going for a lot if I wanted to play both ways and get near the money. I think on this one, I kind of pushed it a little bit lower there. I could have gotten closer or further out there, but I like this option and where it was, but the thing with 3M, if we go to the preview here, this is what we went over. They are kind of in line. They're like outpacing the XLB material index. They're right in line with the SPY on the last quarter, and it seems like the last earnings, gain of 5, gain of 1, gain of 5, loss of 1. They're kind of all over the place, and we've seen 3M report, and it doesn't always stick. So I said, hey, I know they got a good recovery story. If it goes up, we have it in the long term anyways, but I do think that put around $99, that might be a key level with how it's traded, and I didn't want to expose it too much. So I said, for the sake of saving money there, maybe I'm wrong on it. I decided to go one way. And even though they were a lagger and they're outpacing materials but lagging the S&P, I think it just put it in the right middle there where, yeah, there may be a little bit of downside, but even the upside, it's not like they were trailing too much behind the S&P 500. So I went with one put for $32. So that was the second play. And now for the third play, GE, you could see here I went both ways on it. I grabbed the February 118 puts. I grabbed two of them for 32 cents a pop, spent about $64. And then I grabbed one call for $145. So we'll go to the puts here. You'll see they have a weird history. I think you got to pull it up on the daily to really see where it was at. They were trading a little bit higher, but there wasn't a lot of liquidity and activity. So it's hard to say if these were the prices, but in general, they didn't have too much of a premium. But then if you go to the put or the call, the 145 call, you could see it was kind of high, trading higher throughout the day. The day before that, though, it was trading lower. Once again, as some of these stocks start going up, this has changed the premium. That's what makes it so interesting. And now GE, they have been on an absolute tear. This is why I was willing to pay $100 both ways. It has moved a lot in the short term, even in the long run. There's a lot of room. They have had a crazy recovery story. And when we go to the preview here, they're up 20% in the last quarter. S&P's up 13. Even industrials, GE is outpacing all of them. It's pricing in a fairly big move for the company, but if things were going to go crazy, maybe it moves double that. We would need a 10% move on this, but the last four earnings, gain of 6, gain of 6, loss of 2, and then gain of 1. Pretty much the last couple of quarters, they have been pretty juicy for them. It has a nice gain up here. I thought I could justify it both ways, and then I was able to play both sides for $100 and even get more than one contract on one way. I thought this one would be a good one. So this was the one I spent the most amount of money on. We'll see how this one plays out tomorrow. Then the next one was RTX, and this was another one that I liked because RTX Raytheon, they also had a big back and forth off the last earnings. We profited off of this one on shares last quarter, if you remember. It was a huge move, but look at their last earnings. You just see the gaps and the pops, and then it's kind of staying pinned here. Even over the year, you bring it up on the short term, this thing has not moved at all this year. It's like it's waiting for earnings. So I wanted to get involved in that one, and then when we ended up looking at what was expected there and how it's moved, the last two earnings, gain of 7, loss of 10, that was up there. They're up 17%, while the S&P is up 14 and XLI is up 14.5. They're kind of trailing along and maybe waiting for earnings. So that's why I was like, all right, maybe we go both ways because it's hard to tell if it's really going to catch up or fall behind because this is all just going to depend on if they have earnings. And with them being in this recovery story, announcing this, announcing that, they have the potential to really drop a bomb and hopefully surprise more than 4.1% move. You double that up, we're looking for an 8% move. That's like right in the middle of the last two earnings. I think that one is possible. So I decided to go both ways on that, and we got the put, the $90 or the $92 call. Let me see whichever one shows up first. I got to click it. Okay, the put. We grabbed the $79 put, one of them for 23 cents. And what I didn't like about these were a little bit expensive over the last couple of days. I guess they were trading higher. Nobody traded them till today. They dropped, and we ended up buying them later in the day when the stock was dropping. So we had to pay some of the premium, but then you go to the call. I don't know if it was the same situation. They all went up. These were the ones out of the money. So in all honesty, I do think this option chain kind of sucked because you got that day of or the day before movement. But given how the stock is moved, I do think an 8% move might get us near the money there. So grabbed a $92 call, one of them for $28, and then a $79 put, one of them for $23. So that was our third play. And then the next play that we got, was that the fourth one? 1, 2, 3, 4. Yeah. So that was the fourth one. The fifth play that we did, I did end up doing a drop box. This was a news play. Spent $50. It got clapped, but we'll see how that one plays by the end of the week. But as far as earnings, I did Procter & Gamble next, and this one was very interesting. The only reason why I like the play that I got was because recently it was there. They are a value name. They don't go too crazy too often, and that's why I only went one way, $35 for the 155 call. You can see Procter & Gamble, I mean, it's not like they have the earnings gaps. It's kind of stayed pinned. I'm just hoping that they get some sort of big move there, and then you could kind of see they're underperforming. That's why I like the call side, because S&P is up 9% on the quarter. They are up 1.3. XLP, Staples are all doing good. Procter & Gamble not so much, but then last four earnings, 3%, 3%, 3%, loss of 3%. It doesn't really move much, and they're literally pricing in a 3% move. So I figured, hey, if they do a 6% move, they do have a earnings that gets them out of there, and maybe this is the beginning of the year. They even come out with yearly guidance as well, and then they start talking about things going better. They could catch up to the Staples in the S&P 500. I like that idea, but not willing to bet too much on it. And like I was just saying, those contracts just a couple of days ago, they were going for like 90 cents. Same contracts that would get this earnings here, even the start of last week, or again, if you go back to last Monday, they were around like 80 cents or so. I figured, hey, I could justify it, bought one of them for $35, limit the exposure, and we'll see what that one does tomorrow. But that was the fifth play, and now the final play. This one, I think we're going to get the earnings tonight or tomorrow. They are European, but they moved a lot, and I didn't really like this one because two standard deviations in this case was a 20% move. The stock was literally pricing in 10% for the earnings. It says, where is it? Actually, it doesn't even say that. We had to do the calculation ourselves, but it was pricing in 10%. The last four earnings, it has moved 10%, 12%, 7%, and 3%, and they are up 32%, while most of the Europe stocks are up by like 8.8. They have gone absolutely crazy, so I just did one put to the downside. They have been outperforming. If they do bad, a two standard deviation, 20% downside, that's the only way I see it moving down 20%. They surprise to the downside. Maybe after a bunch of good earnings reports and going crazy. I don't know how a blowout will make them go up. There is upside. That is what was attracting me there, and it would have fell within there, but I said, hey, contracts are expensive. In this case, the contracts, I really did think they were expensive because pricing in 20%, even if it's $30, that's just a wild move. So you're kind of paying a lot of money. I figured, hey, I want a little bit more of risk, but we'll control it, and did one play for one side for $35. So those are all the plays. Hopefully you understand it. And again, if you're like, well, why did you pick these prices? Go to that tutorial. But like I'm telling you, the real process, if you want to understand it too, day before, day of earnings, we're going ahead, going through these determinations. Also, you should be learning outpacing, underpacing, kind of showing what people are expecting there. We're going for the contrarian, or if we think it could go both ways, we are getting both sides, and ultimately making sure we have exposure without spending too much money. So Chattadonia, I really hope that helped. I hope you enjoyed it. If you have any questions, post them in the comments. I'm definitely going to make a follow-up. We're definitely going to be doing all of these live, but now that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, a little bit of doubt, always normal, baby. And make sure that you don't ever discount anything creative. Finger to the sky. You know what I'm saying, baby? So stay in the game. I love you all. I will see you in the morning. Good luck. And hopefully this all works out. Horn.